Britannia too has reported its Q1 earnings, and the numbers have come in line with what the street was expecting for the first quarter, with PAT rising over 10%. Margins have expanded to 18% from 17.2%. Overall, if we see, revenue is in line, PAT is in line, and margins are again in line. Vinny Motiwala once again joining us for more details. Vinny, so take us through the numbers of Britannia, and it seems that the company is not really facing any impact of weather-related disturbances, really, is it?
So not much of an impact, though. Yes, there is a slight bit of an impact that one is seeing, because normally, we do see a stronger growth coming in. Now, this time the company has highlighted that they've seen a high single-digit volume growth. Our expectation for Britannia was also at somewhere around 7% in terms of volume growth. So it seems like that would be the figure, because in line with estimates is what the Britannia revenue has come in at. 4.8% was our expectation of uptick in revenues. Now we are seeing an uptick of almost 5.9% is what I'm looking at. So yes, that is what we are watching out for as well. Britannia, good set of numbers, what we could call in decent set of numbers. And other than that, just in terms of the press release that I'm reading out right now, one very said that, they are witnessing some bit of a consumption slowdown, particularly in the rural India is what the highlight is coming in. Keep an eye out on that. They are vigilant in terms of the commodity prices, because that's a big issue, as well as the geopolitical tensions. They're watching out for that. Price competitive intensity, that is there as well, because they had taken some bit of a price cut. So yes, this time mainly there were price cuts that came in, and most of it was volume growth that we're watching out for, because volume growth would be at around 6 to 7%. So yes, all in all, a decent set of numbers that's coming from Britannia. They're making positive strides in terms of the rural growth as well, enhancing their distribution. That's been the focus for Britannia for a very long time in terms of the Hind belt. And the key highlight that's coming in is that the rural market share has now grown faster versus the urban. So that's the key highlight. Though slowdown was seen in rural, but now seems like they're starting to make a recovery, and one more FMCG company highlighting the same thing. So a good set of numbers, decent set of numbers from Britannia as well.
All right. Thank you very much, Vinny, for joining us and giving us all of those details. And viewers, I'm now joined by Kaustubh Pavaskar, who's a senior research analyst FMCG at Sharekhan. Thank you very much, Kaustubh, for joining us. Let's take your first take on the numbers. The numbers that have come out of Britannia. From our overall estimates, it is revenue that is in line, PAT is in line, and margins are also in line. What is your overall assessment?
So revenues came slightly better than what we were anticipating for the quarter. High single-digit volume growth. We were expecting volume growth to be in the mid-single-digit. Margins came broadly in line with what we were anticipating at around 18%, and PAT of around 505 crores is also in line with expectation. So results are broadly in line with expectation. The key watch out going ahead would be how the Hindi-speaking belt is doing for the company, because that was a lag for the company for a while. And, once there is a recovery in the rural market, we should also expect Hindi-speaking belt gradually doing well. And also in terms of the commodity price momentum, because this quarter there is almost 200 bips expansion in the gross margin. So, how the commodity price momentum is, and whether, we should expect such kind of gross margin expansion in the quarters ahead or not. These are something which will be very important from the commentary perspective from the management.
Right, and that'll be interesting to see the commentary coming in from the management. And Kaustubh, while you spoke about margins, I also wanted to understand on things on the margins front. The margins have also been aided and they have come in line with what the street was expecting. But how do you really explain these numbers in the context of the price cuts that were taken in the previous quarter?
Yeah, so margin expansion, if we look the commodity price, they were, except for sugar, other commodity prices were, quietly benign for the company, and the price cuts were taken considering the competitive intensity which was there in the, market. But going ahead, how the commodity price momentum will be, and whether, we will see, normalized kind of a prices, that is something which we need to wait and watch. But in this context, if we look at the overall EBITDA margins were quite strong, at improving by around 100 bips for the quarter.
All right. Thank you very much, Kaustubh, for your analysis of the numbers of Britannia revenue in line. And you are stating that revenue has exceeded the expectations of share Khan Pat in line for ET now. Margins also in line. In fact, margins have expanded to 18% from the previous 17.2%. On that note, it's time for us